Hello, everyone, and thank you for joining us for our financial webcast entitled College Planning, What You Should Know. My name's Dan, the moderator for the webcast. Today's webcast presenter is Jim Holtzman, CFP, CEO, President and Wealth Advisor at Legend Financial Advisors. Please hold as I turn it over to Jim.
Okay, thank you, everybody. So for those of you that are starting this process of college planning, most of the time articles you read are about 29 and just how to pay college is the really part and pay for college. But once you get into the stages of high school and get actually ready for college, you're reviewing, going through applications, that's really changed those points. I'm in the process of doing this as my daughter is starting her senior year, and been going through this with her for really the last year. It made me think about this from our client standpoint, realizing what a daunting process it is. The background that I have in finance, the actual process going through college education, the search process, how everything kind of ties is challenging. So the main goals from this webcast are going to be to really ultimately, hopefully, reduce your stress in terms of understanding this process and give you some information that I've learned going through this and hopefully shortcut some of the pain that can be part of this process, and also reduce the learning curve and focus more on the quality of the decision as opposed to some of sort of the outlying factors that come into this. So the ways we're going to talk about, the focus on this webcast, we're talking about college costs, and we're going to cover it in these different ways. So I titled them the understanding of college if you apply for financial aid, called a net calculator, knowing four main sources of college money, researching the generosity of college, and checking for grad route. And we'll explain each of these in more detail, but this is really kind of the starting point, the high level of what we'll cover. And we'll dive into understanding of these of college pricing. It is really quite a process. And so it's a lot like, and except for one thing, when you buy an airline ticket, and you else is going to the same destination. But where it is that if you used any of the pricing services, Expedia, or just even going to the airlines directly, everybody pays a different price. And that's some of what the process looks like. So the more information you can gather up front and research you can do, like whenever you're searching for an airline ticket, that probably will be. And so, you go through this whole process, you might pay much more, say, for that airline than the person seated next. You're still getting to the same destination, but you might be missing out on some of the perks. And college planning or the college pricing process is very similar. It's quite a decision-making process the schools go through, and the more prepared you are as a guardian of your child or whatever the situation is to be prepared for this, much better place. So the next slide might be surprising. Most colleges are number COVID things out of the number of schools. I know I'd read about a school in West Virginia that is actually shut down before the start of and it's left how many students? I think it was a little over 1,000 students high and dry. And there's so many options right now for students, for what colleges they attend, that it really is throwing things out of whack. And COVID really exacerbated that because of online learning and just alternate options for education. So another way to think about this part of the process is that it's very common to get discounts from the school. I'm not necessarily talking about scholarships directly, but actually getting a discount off of the price of the school to begin with. So just some figures on the slide are that 58% of students at public universities don't pay full price. And 88% of students at private schools receive an institutional break or a discount or a price reduction. And so schools are able to by various grants that this can be based on financial need. It can also be based upon, there's a big difference between the two, which is a little about. And it's so when you go through this process, I think a lot of times there's just a ton of pressure to be a 4.0 or all A student, depending on the scoring system that's used. But it's not just those who have like the perfect grades and look like a perfect applicant. There's a whole process that the schools go through in deciding who they're going to accept and then who they're ultimately going to get some cost reductions to. So on the screen now, this reflects just what kind of the discounts, the averages look like. So private school, just in this example, we have an average price, the tuition of $45,000. Average discount now, based on all of these together, is about $25,002. And so the real for discount is $19,800. So it might be surprising, but hey, I mean, a school that's pretty expensive at $45,000 a year, that cost on average, it does get cut in half. So just another example that college really can be a buyer's market. And we'll dive into some more detailed calculations of how this works. So why does it work this way? Why are the price cuts actually happening? So this might be, again, some surprising data. So 53% of admission directors at private schools don't meet their freshman goals. Now, this data is a little bit old, but it takes a while for the various resources to pull this together. But I can tell you, following this kind of data over the last handful of years, going back even prior to 2015, it's very similar. And so I'm sure these numbers are actually going to increase, and that could be a net benefit to potential students. So further information, 38% of state school admission directors aren't meeting their freshman goals. And it really comes down to about 2% that are really able to meet all of their goals. Again, this data goes back to 18-19 because of the lag it takes to gather it, but it's been a very consistent theme as far as how schools are handling this. So second cutting idea does deal with financial aid. And the big question, I think, oftentimes students will kind of count themselves from even having financial aid, but it really depends on the situation. To start with, for going through the financial aid calculation, counts aren't counted against you. So you have $10 million in a retirement account, and that will not count against you $1 for to contribute towards or your child's college retirement accounts. That's a different story. There is an assessment of 5.6% of that balance assessed against you, and that calculation equates to what you're expected to pay. Income playing a bigger factor into financial aid and whether or not you will qualify for it. There's a lot of nuances that go on at that point, which we're going to cover next. So the expected family contribution, or commonly referred to as FC, is going to be that. So this is a kind of a hard calculation, and that'll derive the number that you are expected to pay. And so while it can get pretty complex as far as the underlying calculations go, there are some really good calculators that do exist online to be able to help you get through that process. But in general, retirement accounts don't count against you. Taxable monies against you, federal calculation, and that's, again, 5.6% essentially of the balance of the account. And that's a really good starting point. Now, income in general will count. About 50% of your income is expected to be paid to college education. And I think that's where, depending on how much income you're earning, where a lot of this will start to fall apart as far as getting financial aid on a federal basis. So let's go through kind of an example. There's two different calculations or formulas that are used. So the first one is what I've been mostly talking about, which is the most common one, the application for federal student aid, and that's the which is really more commonly known as. There is a second calculation that is called the institutional formula, and it's more, in terms of the acronym, it's called the CSS profile form. So it works in some ways very similar to FAFSA, but there are some differences between the two. So with FAFSA, you're going to have to complete this to qualify for any kind of federal and state aid, along with any aid that pay out. Require you to do that. Now, the CSS profile formula is used by about 200 schools. I don't think there's any public schools that are actually part of that system, and it's limited to those 200 schools. So one of the things you want to do is find out if you're looking at a school, is which one of these calculations do they really rely on. So let's take, in terms of, there's a website called the College Board. If you're not familiar with it, you will see with it. You have an expected family contribution calculator on their website, and it's of your information, and it'll give you an estimate, and it's probably going to be a pretty good ballpark on where you stand. And this does get updated every. So where it is today for you, it could be completely different next year. That way, if you have a reduction of income, maybe you would qualify now, maybe you don't this year. So that it's kind of a moving target on an annual basis. So to get that planning underway right away, to at least run a sample calculation to get a ballpark of where you stand. And yes, the rules can change all the time, but some parts of the formula stayed pretty consistent over the years. So we're going to walk through an example of the expected contribution calculation. So I have a couple of different examples. This one deals with a family that has $55,000 of adjusted gross income. So you'll pull that number right from your tax return. And they have cash or taxable investments of $15,000. Yes, that would include money in the bank, counts towards that contribution calculation. This particular family has two parents, one college freshman, and a 12-year-old sister. So two children, one not in college, one in college. So what will happen is, when you actually run through the calculation, the parent's contribution for the student under the federal or FAFSA calculation is $2,507. The student's contribution is $0, leading to a total contribution of $2,577. So again, this would be the expected family's contribution number. Now, using the other methodology, the institutional or that CSS profile form, when you go through the calculation, the parent's contribution is $1,649. The student's contribution is $825, and it comes out very similar. So we got a total of $2,474, very comparable with the federal or FAFSA calculation. So now we'll go through another example. Now the adjusted gross income is jumped to $150,000, cash or taxable investments $120,000, and there's home equity of $250,000. So that'll be just taking the value of the home minus, say, just the mortgage, and that would be the home equity. That's also part of the relation. So in this situation, same thing. We got two parents, one college freshman, 12-year-old sister, so one in college, one not. Now the numbers have changed quite a bit. The parents' contribution under the federal methodology jumps to $31,072. Still no contribution expected from the student. Total expected contribution is $31,072. And on the institutional side, pretty similar numbers, but it is higher. Now it's about $4,000 higher compared to the federal side. So, and that's, you look at the total assets having jumped up, but also the income having jumped up quite a bit as well. And that's where you really get more of a hit on this calculation working against the family, as far as what you're expected to pay being a higher number. So now we're going to change to the next slide. Same family as the prior slide, but now there's two children in college. So you can see the numbers become much more favorable for the family in terms of expected contribution. So on the federal side, it's $16,244. Student's contribution is $0. On the institutional side, the difference is wider, meaning it's a bigger gap between the institutional and the federal calculation. And at the end of the day, it's still less because you have two children in school as far as what the contribution, and that's $22,939. So I'm not going to get too deep in the weeds in terms of the actual calculations, but this is meant to show you an idea of, the impact that income and assets have on this particular calculation. Now, to give an example of zero chance for financial aid, so in this example, the cost of the school is $58,000, and let's say the expected family contribution ended up being $65,000. The family is expected to cover the entire cost of the school, so the demonstrated financial need, going back to financial aid, would be zero. So now we'll look at this example. So the cost of a private college, let's say it was $58,000. The expected family contribution is now $35,000. So the demonstrated financial need would be $23,000, just simply subtracting the expected family contribution from the cost of the private college. So you run through the numbers, you get this number derived, you have the school you're looking at. Now you know, at least you get the school, and there is a demonstrated financial need. And now it comes down to how generous the school is as far as handing financial aid, whether it be merit-based or whether it is ultimately financial need-based. And we're going to talk about that area in much more detail. So now we're going to move into the next slide. And the way to kind of summarize really what we're going through. So if you go through the calculation for the expected contribution, and it's a pretty small number, well, that means you have a large financial need based on how the calculation system works. And if you're starting your college process and you really care about the fundamental things, well, at that point, you really want to look for colleges that provide generous need-based aid. And that's not all of them. There's some pretty stark differences between schools, and we'll talk about that in a little more detail. But, if you have a specific school in mind, at least once you get to this part of the process and do this calculation, you can have a ballpark on how much that school might be able to help, because there's a lot of information out there that shows what the averages are for these schools and how much financial need they give. Now, if you have a large expected family contribution, when you get through the gyrations we just went through, so at that point, you're not going to get financial need. So you want to focus on schools that give really good merit awards or merit aid to students. And yes, that information is available to be able to gather that in terms of schools historically have given for merit aid. So by getting some of this information initially, if you're starting the process strictly on that end of things, that allows you to kind of narrow your search to those schools, if that's how you want to go through that process. Because oftentimes, the student will be looking at schools and they look at a particular school for whatever the reason might be, but then it ends up being a school that isn't a good fit financially. And that doesn't necessarily have to be the complete driver of this decision, but with schools cost so much these days, you could be looking at a six-figure liability based on the school's merit aid-based need that they provide to students. So let's take a look at the third cost-cutting idea. It's what's called a net price calculator. So this is something I wasn't too familiar with a year and a half ago, and now I'm becoming much more familiar with. So with a net price calculator, every school is required to provide this. And it's required to be on their website. It's required to be easy to find. That's not necessarily the case, but they are required to have it on the website. So looking at a school, and just even do like a Google search and put the school name in and put net price calculator, that's pretty reliable as far as getting right to the part of the website to find it. Because if you go start with the college's website and try to drill down to it, that can be a much more frustrating process. But schools I've looked directly just to see how this process worked. Whenever I did type in net price calculator, name of the school, it usually came up immediately. So what they do, calculators will do, they're meant to be a personal estimate of what a family would pay for 1 year in college. So again, this number will move each year based on inflation and based on maybe how the schools change how much in scholarships and grants they typically provide. But the way this works is that you take the cost of the school, and then based on some information you're able to fill in, they try to tailor it to what you're looking for. They will give an estimate of what the potential scholarships and grants are, and then subtract that from the cost of the school to calculate a net price. So as you can imagine, the better detailed the calculator or the more questions being tailored to your situation is going to be. The problem is, while all schools, at least I haven't been seeing it, that did a net price calculator on their website, some of them just use a very and basic net price calculator. So you want to be careful when you get to this stage how reliant you are on it. This is not a binding answer if they give you like a scholarship grant number when you go through this process, but it does give you at least a beginning point and discussion point with the schools in terms of what aid you might get. So I found that to be very helpful, at least as a starting point, and getting an idea of what schools are more generous than others. That part is really clear. So I think if you have like 5 to 10 schools that you're looking at, it makes sense to go through this net price calculator for all of those, and then at least have a side-by-side, comparison to get some perspective. If you come down to where you're down to maybe 2 or 3 schools, and you really your child would be happy with all 3 of them, for example, maybe you use this later at that point to narrow down the decision based on what the price will actually be to you. So I'm hoping that these rules get kind of tightened up where the schools can put in some more effort into what they use, because if it's the same kind of very generic based calculator, then you're not going to get much detail. But some schools do a really good job in terms of questions. Like you might need to take about 10 minutes to fill out the questions so that it can give you the best idea possible. Those are going to be the ones you feel much more comfortable with and confidence with, as far as what the net price actually could be to you. So the net price, like anything to do with school loans, that kind of information is not this. It's really all about the school's scholarships and grants, subtracting off the cost of that school. So let's flip to the next slide. So it's recommended that, you really go and use these calculators even before you apply to the school. And I think that really depends on, what your situation is. And, again, financially, this is a huge decision. So you could use the net price calculator, and if you come up with a school that you may initially like, or your child initially likes, and you see they don't give anything typically on scholarships or grants, really expensive school, and you now know through that expected family contribution area your number is really high, that might not be a good fit, especially if the school, again, doesn't give out a lot of merit-based aid, which would show up really in this part of the calculation. So if costs are a really big focus, I think using these calculators before can make sense before you go down too far down the road, exploring a school, going through the application process, and getting to a point of actually waiting for a decision to be made. So this slide being titled Net Price Detective Work, and it covers a lot of what I had mentioned previously, is that you want to be skeptical of calculators that are just very basic. You get more confidence from the ones that ask a lot of questions and even ask about grade point averages, test scores like SAT scores. They start asking those kind of questions, getting a little more detail in the specifics of how the school operates. That's going to probably be a pretty good calculator. So you do have to be skeptical on it. It's a good resource as one part of the process, though. You don't want to rely on that part fully. The federal calculators, it's a way to think about is that, so the federal calculator is just a very bland template, just a couple, they don't do the merit awards because specific to the school. So if you think of it that way, and you realize, hey, this school is not even providing a good calculator, that could be a red flag in and of itself. And some of the data can be really old that they're using. So when you get onto the websites, you'll be able to see how old the data is in terms of like their costs. Usually those are mostly going to be up to date, but if it's a couple of years old, that really doesn't make sense because that's the school's calculator. They know what their costs are. They have the data. It's not like you're going to sort of a third-party website to get this information. It's coming directly from the school. So now we're going to talk about the main sources of college money and where that comes from. So on this slide, 41% of the money will come from the federal government. 41% of the money also comes directly from the colleges. State governments, in terms of supplying aid or grants to the families, is only about 7% on average. And then private scholarships are only 11%. And I'll cover a couple of websites shortly that allow you to search for private scholarships, things like that. And they get a lot of publicity, but at the end of the day, you can see the numbers are pretty small, what they're able to provide. Yes, there's a lot of money that is left on the table because people don't know about private scholarships. And some of these databases help to filter that through. So it's probably a twofold reason why the number's so low. One is that it does take some work to uncover these type of opportunities. And number two, at the end of the day, what the numbers actually are compared to what the colleges will give in scholarships and grants, it's just a small number. So I was surprised when I got doing some of the research for this webcast that this number was not higher, but it makes sense as to why it would not be. So for federal financial aid, one of the popular grants is called a Pell Grant. In terms of need. So if you have less than $25,000 of income, you'll qualify for a full Pell. Now, right now, that number is $6,095 for the current school year. And the nice part about a grant is it is a grant. It is not a loan. You do not have to repay it. It can be difficult to qualify depending on your situation, depending on where your income falls. But if you have a year where maybe you've lost your job, and your income falls really low, you have money, retirement accounts, income's not going to show up in your return. There could be some years where maybe you qualify for the Pell Grant, and this could be a really great resource because it's a grant, not a loan. So let's go to the next slide, and we're going to talk about state university aid. So pretty much every some kind of a program in place where financial aid can be some opportunities for that. This will only be based on financial need most of the time. And so every state's going to run their programs differently. So this website, the National Association of Student Financial Aid Administrators, will actually provide all 50 into their financial aid website, if you will, and give more information on that. So it's a really good resource, and it has a wealth of information. And as we were talking about before, in terms of state numbers, though, it's not a huge source. And that's probably just because states have less resources than the federal government, all things equal, that are dedicated to this purpose. So the other part about the state aid is that they will probably require you to have that FAFSA or the financial aid form completed before doing that. So that's why starting to pull your information together, get organized with your information now makes a lot of sense because it could be a daunting task. And that's one of the things, for our clients, we have a lot of your finances organized through our various, our data we have like our eMoney software program. We have a lot of information right there. We have information from your tax return. Help some clients pull their data together to complete the FAFSA form, just because when you get into that form, and I remember going through this recently with one of our clients, and you read the information, and you're like, what are they even asking for? And you have to get into the things, and then it's like, oh, they wanted this. And then you're able to pull the information together. And so as much as we can, we help our clients at least pull the data together to fill in the application properly. So that really covers the state university aid side. On the private school, private scholarship side, so it's the search engines, the resources, they're not that great. I encourage everybody to take a look at those resources because you never know what you can find. Oftentimes they don't cover everything that's even available. Like local scholarships on a very regional basis usually aren't going to be in those databases. Usually going to be more nationwide, if you will. So Coca-Cola gives scholarships every year to about 250 students. And the problem is that they receive over 100,000 every year. So that's why the success is not going to be very high. But at the same point, you might find some opportunities that are very tailored to your situation or where your interests are. And so I think it's worth the effort in going through it, but it's not going to be probably the end all be all as far as this process goes. And the numbers just simply bear that out. But I do think part of the reason it's low is just because you only have so much time to go through these things. But if you have the time, you might be able to have some success with it. That could make a difference for you. So there are a couple of the websites. There's one called FastWeb. There's another website called scholarships.com. They're pretty good resources for this type of information. The College Board does have a search engine for this purpose as far as finding scholarships go, but also keep in mind it's not going to really cover a lot of regional scholarship opportunities as well. So the hard part is there's not a great database for that. But even it could be depending upon whether you're a first generation college student. Some scholarship opportunities are very geared towards that. So it's again worth the effort going through it. But the other thing that's very interesting that can be tricky about this route is that if you have the financial need, you're going to rely on financial need-based aid from the schools. What gets really tricky is you find, let's say you have a $5,000 private scholarship somewhere, and let's say it was because you're first college student. Well, if you qualify for financial need from the school, once you go through that expected family contribution calculation process, well, they're going to count private scholarships as income, and they're not going to give you aid for that. So it's really tricky how you want to navigate. Now, if you're in a situation where you're not going to get any financial aid, and you're only going to get merit-based awards, if that, going the private scholarship route won't hurt you because there's no expected family contribution. So another way to put it is that if your expected contribution, let's say, ends up being $1,000, and you find a private scholarship for the $5,000 in the example I gave before, where your expected family contribution is naturally changed. You're going to that's going to count against you. So it's really, this is very tricky. So to give you an idea, on capex.com, this shows you a listing of different scholarship opportunities that are broken down. The science scholarship here at the bottom, and there's a whole range. I mean, there's one here, Scout. In an application process, there might be, and probably will be an essay you have to write, for this as well. But there's some to look at. Now we're going to talk a little more about institutional merit and financial aid. So we're going to dive a little bit into some of the schools with the aid, often some of the elite schools. And I think the main takeaway is that just because the has a recognition that includes even some of the Ivy schools, if you're able to get in and you qualify, the financial aid can be pretty substantial. Of course, in those cases, it's also hard in schools, so you don't want to be, fully focused on the Ivy schools, the schools that schools with grants little no merit aid because they don't need to, and that's supply demand. Those are the beat, even coming out of COVID, where the demand to get in is very high. Families are applying that can afford to pay the tuition outright, and therefore is here often give little or no merit. They just simply don't need to. Why would they if they don't have to? So some of the information that you can gather is really helpful because you can, and we'll talk about this very shortly, there's a lot of resources that will break down this information for you. Those are generally give good merit for each. So this is a little bit of a listing of some schools that small merit scholarships, maybe to some degree not surprising, maybe it is. There's some pretty good name recognition on here from some of the schools. The main reason is going to be, again, is that the students applying with the resources to pay will end up being a pretty large number. So schools just don't have the need to give high merit. In terms of a wider net, research university is going to be more than the name recognition type schools where maybe aid is generous. You can colleges and what they detail as being master's level universities, and the number pretty. I mean, you have 1% is per type of it. The master's levels universities provide 86 students, but then research universities 80% get discounts. Excuse me. So I'll cover athletic scholarships because I do get these quite a lot, just in terms of conversations go. And pretty interesting as far as when you break it down, what the numbers look like. So I put in that from the for 2022, strictly just relating for college football, and I just found this really interesting. So it breaks down the number of U.S. high school players in that school year, so being a little over 1 million. The number of college players is just 600,000. And so that breaks down to the percent of U.S. players competing at any college level, and this is Division III, is, just call it percent. And when you break it down further for just Division I, it's only 3% of U.S. high school players will compete at that level. So the odds of a high school player making any college is 11-1, and then it goes to 31 for NCAA Division I. And that's important because pretty much at the you're going to get a full ride. That's not the case in 2, 3. So it's just the numbers are so stark, and odds of making it at college level, really at any level, to be a generous financial aid is really small. So I took a look at one of the schools that aren't on TV all the time, college track and field. Kind of a similar story, and so it breaks it down in a similar manner. I did the data had down between email, what those numbers look like, and we're only dealing with 3% of high school students compete at the track and field at any level, down to 2 to 3% at Division I, and then you get to see what the odds are, at those points. And it's the Division I side where you have a better chance of getting a full ride. Those leave it for the athletic, but that usually comes up in questions about any children that are playing high school athletics. And the main one, NCAA calls their head count sports. So this is pretty much where you're going to ride. It comes down to football, men and women's basketball, women's volleyball. That was something women's golf as well, and along with women's tennis. So those are the ones that should provide scholarships. And then the other sport they call equivalency sports. They don't get a full ride for those. So just interesting information when you really start breaking it down. So now in terms of the fifth cost-cutting idea, the generosity of colleges, it will be really helpful when you get into your researching of the schools. If you get that list whittled down to maybe 10 schools, this becomes helpful. So the College Board has a nice website for this. You're able to put in the name of the school. You set it up first off. There's information on their website, and college is able to really give you information about any school and whether they provide really need-based aid or merit. So it's a really great starting point. So this gives you an example of the kind of information you can get from the College Board website. So this one is, the first school we'll talk about is going to be bear with me one second here, for financial aid distribution. Every school will be broken down this way. So we're looking at Yale University in this case. So it's really interesting about this, and there's a lot of information, and we will make these slides available for you to spend a little more going through this. But what we see is that at the end of the day, they meet 100% of the financial need of graduates. Now, further, and that's what this last part means by the 100%. This shows you a little bit better breakdown. So there were 54% of undergrad need-based aid. 92% of them were judged to have need-based aid. 92% were off aid. 100% their need, financially speaking. And then over here is the average need-based scholarship or grant. Now, it's a number because Yale is a very good university. And then there was a couple of $1,000s that were that's based on a need-based. Both this type of information for every school, as long as their information has been provided to the college board, and most of them have. So it's a really good starting point. Again, down to your top three, and it's going to be, your child's very happy with all three. They're great fits. It really comes down to a numbers game for financial aid purposes. Kind of resources really, and if you're able to make a 10 to 20 times difference for use resources like this, those numbers add up pretty quickly. An example of a school that does not good need-based aid is university. So look at what a difference is. Of it's a based aid, 80% are judged to have a need, 8% offered aid, 10% had their full need met. So if it comes down to strictly, the numbers again, NYU is probably not a good school to choose because you're going to be left with an outstanding balance as far as what you need to cover. And then there's loans and that whole process. But even before you get to those points, this type of information can be valuable for you. Now, another school I hadn't even heard of getting prepared for this website or this webcast is Hendrix College. So they have large aid, and you can, again, go through I'm not going to read through all of these numbers to you. I think the idea of the kind of information that you're able to get, on these websites. And again, just to have that information at your pips as your side-by-side comparisons, print out these pieces, have them literally lay out side by side, and you can get a good idea of the differences. And some of them, again, can be pretty large. So the next thing we'll cover is four-year graduation rates. So what does all of this mean, this part? And, what if the students are going for increase the cost? You can actually get this kind of information. And so here, again, this is going to be from higher education, a lot of information on the site. You can get, newsletters from them. A lot of really good information can be sent, as part of the process. So it'll actually, they have a section of their site that deals with the college completion rates. And so that's information that you're going to get. So this is saying that this data obviously is what they have on the website for students starting college. But it gives you an idea. 4.3 million freshmen entered. This is it is very much up to date at this point, but it breaks it down between public universities, community colleges, private colleges, and for-profit colleges. Just getting some information as far as the breakdown. Get into an example of Princeton, and again, this is coming from the Chronicle of Case. You back in this case, they only had back to 2013, which was really amazing. It hasn't changed too much as I looked at Princeton and tried to get some information from this website that it has all of those on. And for the most part, it seems like the data doesn't change too much at this point. But you get an idea. It's almost 90% graduate in 4 years, and almost 97% graduate in 6 years. Give you some of the averages, what those are across the where Princeton falls in is actually pretty good. This one is for San Diego State, which was amazing. Their numbers were only 32.7% graduated in 4 years, and 66% graduated in 6 years. So again, it breaks it down demographically. It can be information overload, but again, another good source in questions to ask. And if their data is old as far as what they're providing on of higher education, you can go to the school, it will have more recent information. I think these websites are really recent, and I've seen some website that they have information as of 2022. So checking for your grad rates, this is kind of a listing of schools, and some of them surprising, but schools like Indiana University, only 58%. And then you look at San Jose State, the rate is percent. I don't know why that's the case, but again, that's good information that you want to find out more about. When you're going to schools, when you go traveling to meet with schools, these are really good questions to ask. So with that, I'm going to open it up to some questions and answers to the website or to the webcast. I want to take the opportunity to make sure I can address some questions that are available. These slides will be available. Some of the resources, the websites that are here, strongly recommend going through this again. I've actually come up with some ideas on another presentation that kind of for some even discuss. The things that it was the trend that was taking place before COVID and it's really just significantly since, is that the T that everybody takes, the SAT score is such a big stress for this process. I am schools they're test optional, and that means you don't have to submit your score. If you it can only help you mostly to submit those, but now most schools are making a test. How much impacts you depends on each school, but it's a really part of the process. Or just some of the changes current, and because of COVID, it just the numbers skyrocketed in terms of schools, and the majority of they call themselves professional, but in reality have submitted. But if you don't have a really good score, it could hurt you. Where we had to submit it, and then the chips fell where they did. Change how it's all been this process. I think he's kind of one way. It was black or white. It was going to be on that was a big part of it. Now things are at least to be evaluating the exit, sport, whatever the case is, more specifically, what you might. I think it was that way, but the score prominence or the importance has really fallen over the last handful of years. So that's an process or experience to go through. You have that have early decision deadlines. If you submit and get an early decision made about being accepted, it's a binding decision. You have to go. That's been in place. That's been around for a while. Putting more now every school process. Decisions, regular admission decisions, and it really warrants an entire on its own. For the things at least I've learned, just look at it. The application process just opened up an application for the schools. Some schools use they use their own application process. They already use the common application. They might supplement with some other questions and ask. Resources on this is a company or that is actually able to break some of this down further, and which schools do these various early decision deadlines and a lot of really good features. So as we analyze for our clients, we'll let you know some of these resources available to you. And for those that are listening today that have an interest in something like that, you can let us know that, and as we develop that software component or decide on a software to use for that purpose, we can keep on with that. But I think it's going to be very powerful. The more you can, the learning curve is just going to be so important in this process because it's overwhelming. They're trying to sell you, and it makes sense. That's part of the process on it, and they're doing their best to lay out the best look for their, and they have a lot at their fingertips. But I think you need to have some resources available to you that sort of allow you to answer it, but to be better prepared as you get the process. Let me see what if you have any questions. It's a lot of traditional college planning as well. I think I'm not coming up with any questions at this point. So what I'm going to do is I'm going to turn it back over to Dan. And if you have any questions after the fact, or there will be a survey, feel free to ask them at that point as well.
Hey, Jim, I just wanted to go over one question that was submitted by an attendee before via the sign-up form is what can someone do who is not wealthy but saved $150,000 for a child's education and therefore does not qualify for non-debt aid?
So then they had saved $150?
$150,000, so therefore doesn't qualify for non-debt aid.
What can be done for financial aid purposes?
Yeah.
Okay, so you're already qualified for financial aid. I mean, at those points, I mean, you're really going to be on the merit-based aid route. I'm not sure if that's helping the answer, but at that point, once the financial aid part has been taken away, down to merit-based aid. And I'm fully understanding the question. So if there's a follow-up to that, I'd be happy to address it. And I think that's what I was trying to outline at the beginning with the expected family contribution and getting through that part of the process. So if you know you're at a point where you're going to be getting the aid component, then it sort of opens up your process in terms of what schools you're looking for, awarding them based on, and then really basing on the schools to give the best aid. So, and again, I apologize if that's not answering the question being asked, but I'd be happy to address that separately.
Okay, great. Thank you, Jim. A lot of great information we covered today, and I want to thank everybody for joining us for the financial webcast. If you'd like to schedule a free conference call consultation with a member of our advisory team, please call our office at 412-635-9210 to set up an appointment. Thank you again for attending, and this concludes the event.